We've had our Global Shared Services Center here in Singapore since about 2004. We have about 40 people occupying the facility out there, and we have included in it the procurement organization, which does not report to me, but they handle international procurement, including the supply chain activities for our manufacturing in China. Then under the accounting side, we have the transactional team, which handles global accounts payable and expense reporting for Brocade throughout the world. And then we have the statutory accounting teams, the EMEA team and the APJ team. We've been quite successful out there. We've managed to deliver on all of our SLAs over the years with a minimal amount of adding staff. I do get a lot of questions as to, why do we continue in Singapore?
Exactly, that was my next question.
Okay, and I'll be quite honest with you. I think at the time that it was set up, wage arbitrage was a big issue. Sure, a lot of people were looking back in the 2004-2005 frame to chase the cheaper labor dollar. Well, I think we all know how that's working. It's not working anymore. Singapore provides us with a superb workforce that's well-educated, multilingual. So for our purposes, it's served us quite well, and I hope it continues. I have two FP&A people that are embedded in our sales organization. We do an awful lot of outsourced work because our statutory accountants are responsible for booking the transactions, but they don't do payroll, they don't do stat audit, they don't do some of the statutory accounting that's required in the various countries. We do outsource those type of things.
The starting point is always transactions. I think it's logical. You want something that's high volume, that's repetitive, that's fairly common across different countries, so where you can build a lot of scale around transactions. I think once you have that maturity, once your team is kind of steeped in the business and they understand the business, then I think you can start layering on analytics, management reporting, risk and controls. You can begin to build out. I think if you start a captive center, and it's not doing transaction processing, it's going straight into some of that higher value add activity, you need to be quite careful. I think that's a little bit of a big step, and I'd probably call that a center of excellence rather than a shared service center. I'd also be a little careful about the idea of chasing the arbitrage, going somewhere low cost to build a center of excellence. That doesn't kind of resonate for me. But so that's a logical step. I think finance as a function is probably the one that's I won't use the word easiest, but it's easier than HR, than IT, than customer care, because it's very transaction-centric. I think that the balance is around the capabilities and the costs in the country versus putting it somewhere really, really cheap where there's no track record. You don't want to be first. I mean, that's the one thing I've learned, never be first in this. There's always got to be somebody else out there who's done this, been to a location. You don't want to break new ground. And I think that there is some arbitrage, but it comes with scale. So my view is if you have a center of less than 100 people, I think this whole debate about Singapore, Malaysia is yes, there's a percentage difference, but in the reality on your P&L, I don't think it's a big cost. If you're talking about 500 to 1,000 people processing transactions, then yeah, I think that's material. What seemed to happen in this region in the last 10, 15 years is people didn't really have that scale. We weren't setting up centers of 1,000 people, and actually in finance, in-sourcing, setting up your own captive was more popular than outsourcing. But I think historically with finance, and it may be to do with the fact we're a pretty conservative bunch in finance, we've tended to want to do it ourselves. And I think if it was small, that meant do it yourself. If it was big, you had an option to outsource. I've helped set up centers of 15 people because it's about building for the future. It's about how to scale up in the right way. It's about how to have some business continuity. There are other reasons than just the arbitrage on the labor. If you're in an organization where there are 25 people in the region in Asia Pacific, you want to build some scale in the middle because when you grow, you want to grow there. You don't want to grow in each country. So I think people are now looking at it not just because they have an existing large finance population and they can get some arbitrage. It's not just cost cutting. It's just about how to grow strategically.
Excellent. You're a specialist outsourcing organization, if I may put it that way.
TMF is what I would describe as a global company. We are global and we are local. We are global because we are one TMF. It's a company of European origin, and we are really all over the place. 120 locations, 80 countries, something like that. We are also local because of that, and then we are global because we also have our own shared service centers. We have delivery capacity in all of the things we do, corporate secretary, accounting, and payroll in all of these locations, and then we have shared service centers where we shift the work if and when it makes sense for improving the quality and the cost of our delivery. So in Asia Pacific, for example, since we're talking about people, we have about 1,000 people in APAC, of which about 20% are in our shared service organization. We have 3 shared service centers in Asia Pacific that serve our clients, and that is completely transparent to our clients. We are certainly a niche player in the sense that we do things that nobody else can do.
Okay.
Because we play on our unique footprint and our flexibility. For us, no client is too small, no client is too complicated. And we do not promise to be the absolute cheapest, but we certainly will keep you out of trouble, and in some countries out of jail. And that has massive value for many of our clients.